Hello, Maverick traders. This is Rob Reinhold. It is August 3rd. The week is almost up, and what a week. It's been a pretty crazy week. Let's talk about what we're going to be going over in this video. We're going to be going over the review of the day. We're going to take a look at the news. We've had a lot of news over the last 24 to 48 hours. The broad markets, are they breaking down? Are they going to hold? We'll take a look at the commodities. We're going to update our market scoring. We do actually have a downgrade, technically, in the overall markets. And as always, we're going to be talking about trade setups. I've got 4 for you today, 2 long, 2 shorts. So let's go ahead and get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, let's break down today's action. I want to start off with the news because we've had a lot of news. We are right in the middle of earnings season, and earnings have almost been forgotten because Tuesday after the market, the U.S. got a downgrade from Fitch from AAA to AA. Now, look, that is the big deal. I know this market has actually reacted well, and a lot of people are saying, hey, you know what? Fitch is kind of its own little thing. We're more worried about like an S&P downgrade or another rating agency. But you could see the pressure it's been putting on this market. We had a big down day yesterday. We had a big down morning this morning. The markets are still shaky for it. And what's happening is people are starting to bid up the treasuries. And during the last few days, we've seen the 10-year yield not just rise above 4%, but we now have broken out of our 1-year level to we're now at 4.2%. And we talked about how this is likely going to put some pressure, especially on tech stocks. We also had the ISM services. It was below estimates. We had the ISM manufacturing earlier this week was below estimates. So the economy is not as strong as people think. And then we got some negative tech earnings. We had bad earnings from like PayPal, Qualcomm, and Robinhood. It really just sent the whole market down. As you can see, we still had an okay day internally. 58% of the stocks were down. With that being said, we started the day down. We rallied all the way back to positive, and actually we fell back down. So ultimately, this was still a more negative than positive day. And look at that amount of stocks above the 50 moving average. That was 73% just a few days ago. So as you can see, all the internals are starting to say, hey, you know what? This isn't as strong as a bull market as it once was. So the numbers for the day, the Dow was down a little bit, S&P down 0.25%, the Q's down a little bit, Russell down. Look, it was a recovery day. We did not close on our highs. Gold was down, but look at oil. We made a call last week that the energy sector was ready to rock and roll, and boy, it was a good call. Great trades going on there. Great job to everyone who jumped into those. We need to take a look at the charts because the charts have changed. We have been solidly above the 20-day moving average for a couple months here. This is the first time we've closed below it. Now, I do want to point out today's candle. Yes, we broke below the 20-day moving average. A lot of times, the markets like to what we call pierce these points, and it causes this amount of fear. It causes people to get flushed out. A lot of times, it recovers very quickly. Here's the question. Is this going to be the time? Now, when I take a look at this candle today, it's a green candle. So that means we gapped down. We traded down a little bit, but then there was more buying than selling for most of the day. And the green candle means that overall, from the beginning and close of the market, there was more buyers than sellers. However, we cannot ignore that it is now trading below a 20-day moving average. So we're going to have to downgrade this to a +2. If we take a look at the NASDAQ, same thing. We got a candle today that, yes, it is a green candle. That being said, we are now solidly below the 20-day moving average, and this one's even worse because we failed to make a new swing high. Remember, the S&P was high basing before it kind of broke down. We went down and we tried to rally and we failed. So the NASDAQ is showing even more weakness. That being said, we are still have to be bullish on a technical basis, just not as bullish as we were. So for me, I'm taking this NASDAQ down to a +1. So we went from being solidly +3 just about a week and a half ago. We kind of backed off a little bit, and now the charts are actually showing us it's time to back off more. That being said, tomorrow is Friday. Fridays have been very, very strong for the last 2 to 3 months, and we have a payrolls report on Friday. If we recover on Friday, and we are back up above a 20-day moving average on both the S&P and the Qs, you have to go back to like a +2. You just have to. I know you may not feel like it, but that's what the technicals say. If we get a red candle tomorrow, and a nasty red candle, we might, for the first time, go down to a 0 or just a +1. We'll just have to wait and see what happens tomorrow. Nothing all that interesting in the heat map. It's really strength and weakness everywhere. So it's really nothing to point out here. I do want to point out, though, energy. We made a call that energy was going to start to pop to the upside. It's had a very nice week so far. This is where we were. We said in our trading room over the weekend that the markets were still strong. We talked about, okay, it's basing. The momentum's gone. We now actually have to downgrade this for the first time in a long time. On the S&P, we're going down to a +2. And if we get another red candle tomorrow over the weekend, we will now be at a solid +1, meaning, hey, you know what? We're still bullish, but we're not looking to be super aggressive. We're going to be backing off everything and reevaluating. Let's take a look at some trades. I've got 2 bulls, 2 bears. There's some great trade setups out there. Look, there's times where the markets are a little bit shaky. You don't know what's going on. Boy, there are some stories that are just going both directions. Longs and shorts look great. I don't really love sideways here when the market's in a flux. When it's like, hey, I'm not too sure where it's going to go. I like to have more directional bets on than sideways. Let's take a look on the bull side. Patterson Energy. Beautiful high base. Okay, you might say, hey, Rob, this thing hasn't broken out with the rest of energy, but guess what? It was strong when the rest of the energy sector was on its heels. Now the rest of the energy sector has picked up. This thing is high basing. For me, it's just a matter of when is the breakout. I'm looking at 16 as, again, short-term target, and probably tomorrow morning, if there is some money in the Friday 16s, I'm going to buy a longer dated 14 call and sell this week's 16. If there's no money in it, I'm going to have to go out to next Friday. But again, diagonal call spread, high base all day long on Patterson. Next up, we have Kohl's Corporation. Now look, I cannot stand this company. I have been to Kohl's many times, and it is not my cup of tea. I was going to say some worse things. I'll just say not a huge fan. It doesn't matter what I personally think about Kohl's. Now, when I was a young trader, I could never buy a stock if I hated the company. Like if I hated the company, I could never buy it. But if I loved the company, let's say I really liked their product, I could never short it. I remember my first time I encountered it, TiVo. For those of you that are old enough to remember TiVo, the best invention of all time. You could skip through commercials. And TiVo came up as a short. And I remember having this internal struggle, like, I love my TiVo, but the stock's going down. And I shorted TiVo, made some money, and realized, oh, I still love my TiVo, and made some money. You don't need to trade your opinion. And frankly, you should not trade your opinion. I despise Kohl's as a company. I hate going into the store. Guess what? The stock looks great. The stock looks fantastic here. And frankly, I'm really excited to make a long trade on it. So right now it's hanging out right at 29. Same thing. If tomorrow's 29s have any money in them, I'll do a short-term diagonal. If not, I'll have to go out to next month. And if I go out to next month, I'll probably do the 30. So looking to do something like a 27-30 diagonal call spread, just waiting for this thing to either keep basing, which will be great for my diagonal, or make a move up to the next range of 30, which will be my max gain point. Nothing on the sideways end here, but I want to take a look at some shorts. This here is Crown Castle. This is a real estate company, and you can see we've just now broken down some major support. Not a ton of volume on the breakdown. So look, we could get a bounce back up to 108. I think you got to be ready for that. So in this case, I really like to do some longer dated vertical spreads, meaning, hey, I don't know what's going to happen in the short term. This thing could go down and then take a bounce and then fall later. So for me, I'm looking to go out 3 weeks on this one if there are 3-week options. If not, you'll just have to do the August 2 weeks and just say, look, I think it's going to be below 105. So look at do like a 105, 110. 105, 110. You could do 100, 105, but I think that's a little aggressive. I think you got to take a look at something right around that 105 area on the short side. And then here's this one, Azul. No idea what they do, don't even care. As you can see here, it's been underperforming while the market has been ripping higher. So looking like to break down here, there's a lot of room underneath it. I'm not going to play it down to here. I'm just going to play it down to 10. So I'm going to do a 10, 11 bear call spread. I'm going to get about 50 cents in. This is going to be a 50-50, 1-to-1 risk reward play. Very controlled, but I like the chart on this one. There are lots of things to trade out there, even though the markets are kind of in a flux. Let's talk about tomorrow. We are right on the edge of a technical breakdown. Now, over the last couple of months, I've been saying, look, I know you may not feel bullish, but it's a bull market. You have to buy. And we have a saying at Maverick, sometimes you got to plug your nose and buy. Sometimes these markets go higher for no good reason. And frankly, there's a lot of good reasons it should go down, and they still go up. The markets and the technicals have been telling us, be long, be long, be long. And I've been hammering on all of our traders to, hey, look, I know you may not feel like it, but it's time. It's time. You got to go long, even though the market is, the economy is, yes, I get all this. And I said, until the technicals tell us to not be bullish, we're going to stay bullish, whether or not we like it or not. We are getting to the point where the technicals are getting to a point where we might have to say, okay, it's no longer this bullish move, and we'll go to something more defensive. That is not today. I am not ready to make that call today because a strong day tomorrow, everything is rescued. Everything is saved. If we have a big breakdown tomorrow, okay, I'll update my opinion over the weekend and we will be downgrading scores as well. We're going to follow the technicals. We are not going to follow our opinion. Tomorrow is a payrolls report. This payrolls report could go either way, as all payroll reports go. If it's a big jump higher, I'm telling you, the market's saved, the money probably comes back into the market, and we go retest recent highs. Look at the earnings. We're still in earnings season, so make sure you know what's going on. Thanks for joining me. That is the Market Roundup. Goodbye, everybody.